Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Tuesday, November the 11th. And I'm starting off with ASOS, where it looks as though we still have this powerful looking reversal formation, the island bottom, the unfilled gap to the upside through the 50-day moving average, and what is likely to be a bull flag resting on the 10-day moving average just above £25. The idea now is that after any consolidation that we see over the next couple of sessions, there should be a new move to the upside, and that would take the shares to the top of a rising July price channel at £35. The attraction here really is that the stop loss on the upside argument can be as tight as just under £25, so you're risking less than £2 to try and make 7 or 8 or more. Next up is Forte Energy, where I'm also looking for a bull flag breakout. Here the flag formation is not quite as obvious as the one we see at ASOS, but it still looks as though we've got this bull flag here resting on the 10-day moving average at 0.14 pence, and that should take the shares back up to the top of the range, the post-July range, through 0.3 pence. So decent risk reward there. At this stage, only really well back below the 0.1 pence level. I would suggest that Forte Energy is continuing, or will continue, to break down. Next up is a stock which I've been waiting to take a look at for quite some time, MX Oil. Here the situation is that obviously it's relatively new to the market, so there wasn't much data to go on, but it does look as though there's been a wedge formation breakout here around and through the 2.5 pence level. These narrow lower lows that we've had over recent weeks also backs the idea that finally the shares are snapping back to the upside, and the ideal scenario is that we recover this former initial support here at 2.92 pence as quickly as possible over the next few sessions, accompanied by bullish divergence in the RSI window. The initial target back towards 3.5 pence, which is also the area of the 50-day moving average and October resistance. Finishing off with rare earth minerals, where there's been this sort of bumping along the floor of a rising trend channel from April. That's also the level of the 200-day moving average at 0.96 pence, and so we should have a decent risk reward buy trade on for the stock, especially after what was quite a cruel breakdown back below 1.5 pence or 1.2 pence support zone post July. During October. Higher low for November is also positive. If you're cautious on the shares, maybe wait for a break of the 50-day moving average, currently 1.27 pence. Obviously, that's going to come down and be closer to the price action over the next few days, or a break of RSI 50 versus 43. Initial target, obviously, back towards 1.6, 1.7 pence, which was the post-summer resistance zone. That's it from me. More updates at spreadbetmagazine.com.